I'm Tim Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the July 2025 meeting. At its latest meeting, the FOMC chose to maintain the target Fed funds range at a level of 4.25 to 4.5%, and they also maintained the rate on reserve balances at a level of 4.4%. The decision was expected by the markets but was not unanimous. There were two dissents, one from Fed Governor Michelle Bowman and another from Fed Governor Christopher Waller, who both favored a 25 basis point reduction at this meeting. The post-meeting statement changed somewhat, particularly around the Fed's economic assessment and outlook. The Fed acknowledged that economic activity moderated in the first half of the year, when in last meeting's statement it was described as expanding at a solid pace. Regarding the outlook, the Fed simply said uncertainty remains elevated in the July statement and dropped the prior meeting's language saying uncertainty had diminished but remains elevated. We'll see if Chair Powell gave us any information about the future of rates at his press conference after the break.
In our modern world of fast-paced data gathering, information sharing, and constant communication, risk is here to stay. Thankfully, so are we. As a fellow credit union and trusted ally, Vizo Financial has partnered with industry leaders in risk management to offer advanced solutions and expert support to safeguard your assets. Locate any weak areas in your institution's defense systems and prepare your team's shield ahead of time by activating our services in social engineering testing, penetration testing, vulnerability scanning, fraud prevention, and threat surveillance. And with our risk management solutions, you can count on cutting-edge technologies like 24/7 access to cyber threat surveillance operations and advanced integrations that harness the power of artificial intelligence and machine learning. Do you have the risk management solutions to prepare for what lies ahead? With Vizo Financial by your side, we can help you build a secure future today.
Welcome back. Chair Powell gave his prepared remarks to start the press conference. He said that recent economic indicators show growth is moderated, with GDP rising 1.2% for the first half of the year versus 2.5% the prior year. Further, he said labor market conditions remain solid and that inflation remains somewhat elevated relative to the committee's 2% goal. He indicated that government policies continue to evolve with still uncertain effects. Though a reasonable base case is that economic effects of the policies are short-lived, they could also be more persistent, and those risks need to be assessed and managed, which the Fed intends to do to prevent a one-time increase in the level of prices from becoming a long-term inflation problem. In the question and answer session, I don't think there were any surprises. Regarding rates, Chair Powell said that the committee has made no decisions about September yet, and that the economy seems to be performing in a manner that indicates it is not being held back by the current modestly restrictive monetary policy. Further, he said the labor market is in balance, as slowing job creation has been met by a reduction in the supply of workers, which has kept the unemployment rate fairly steady. He noted, however, that there are some downside risks to this scenario. On the tariff front, he said we have more information than we did, but we are still in the early days and have some time to go before things settle down and we know the true impact that the consumer will feel. Currently, evidence seems to indicate that entities upstream from the consumer are bearing the price increases, but that is likely to transfer to consumers over time, and only time will tell to what degree. Concerning the two dissents at the July meeting, Chair Powell was not discouraged by them nor surprised. He says what you want around the table is for everyone to present their thinking and arguments clearly, and that is what he got from everyone at the meeting. He said it is a unique situation in the economy right now, and it's not surprising there are differing views. So, not really a whole lot new except for a few on the FOMC being ready for a rate cut while the majority is not. If things keep trending the way they are, it would seem more will move to the rate cut camp over time. If enough move in time for a rate cut at September meeting is what will keep us interested for the next few months. That's the FOMC update for July. Thanks for watching and be well.